what's going on, everybody? Man, it's Wednesday already, and let's jump into it. So, last time I made a video, I believe I was in GLD. I think that was the video where I said gold again, at some point last week. Well, I closed that out on I think this day or so, so those, pretty good. Those were the debit spreads. I don't have those written down right now, but whatever. Like I said, So it was on this day above the 21-day moving average that I went long gold. And like I said, my opinion is still that the bull run for gold is over. If gold gets back above, like 3,400, I'll change my mind. But I'm of the opinion that gold is bull run's over. So, just because I believe the bull run for gold is over doesn't mean I would not place a trade that meets my criteria. And that's all that's important. My opinion changes and doesn't really matter too much. If a certain stock meets my system's criteria to place a trade, I place a trade, and that's that. So now, with that said, I'm more skeptical on holding that for a larger gain. If there's a gain to be had, I'll take it for a nice conservative gain. And that's exactly what I did with gold. And let's look at this on a weekly chart. I don't know. This still looks good. I mean, this is kind of in a sort of flagging pattern. See, things certainly stretched. But, I saw something where GLD is losing more money. Here it is. In fastest pace in 3 years. Is the safe haven trade over, Yet to see, but that is not something that would go into the bullish camp for gold. Now, that's okay, so that's that. Now let's talk about MicroStrategy. A real super bummer for MicroStrategy. And we'll talk about this. I think my average cost basis moved from like 330 to 350 or so. So I had got into MicroStrategy like right here on this day. And held. This is over the course of a couple weeks, and added off this 21-day moving average. When was this? Friday, Tuesday, Wednesday? Yeah. So this was Friday. Terrible day on Friday. Tuesday, it got rejected off the 21-day moving average, and I sold out of this at like 373 or 372, somewhere in that range. So that was still a sort of 5% gain or so. Really quite a bummer. I certainly think that this can still go much higher. But MicroStrategy had started rolling over. The stock is really rolling over, while Bitcoin is still performing pretty well, but is in sort of extreme territories for the short term. So the probability that Bitcoin goes higher from here over the next week or so is less than it going lower, and so the risk of holding those shares was greater than the reward, in my opinion. So Certainly, I don't think Bitcoin's bull run is over. But moving forward here, it'll just most likely be in calls and IBIT. The reason I really was in equity for MicroStrategy is I was looking to hold that position for a long time, but that was my opinion, and within 2 days I changed my opinion and moving on. So that's that for Bitcoin and MicroStrategy. Now, I know there are kind of lots of things going on behind the scenes with MicroStrategy and stuff, so we'll just kind of leave that be for now and see how all that sort of plays out. So that was everything I did closed out since the last video. There's trades that I opened since the last video, and we'll go over all of that right now. So let's just start with SPY. On Friday, on this day, here, I'll tell you where. Let's see. Yeah, so this would be Friday. Yeah, so this is Friday. So like right here, I placed some debit spreads, so Friday. Let's see how this looked on Friday. Yeah. So with the stochastic down here, it was a little bit low, around 20 on Friday. I waited to see if there would be any sort of rebound, and there was. So placed some debit spreads, some more aggressive ones, but those are really the best value that I could find. Expiration is June 6th. 582 on the long call, 592 on the short call. I paid $424 for those. Those are around $6-ish right now. And it's funny, on Friday these are performing fantastically all the way until the very end, right at the close, and then these are flat, but yeah, so this is working out good. Like I said, with things starting to work a little bit better on these pullbacks, you can get a little bit more aggressive, and so that was my plan, and so I'm gonna execute the plan, and we'll see if it works or not. But regardless, you have a plan, you stick to the plan, and then good things will happen as a result of that over time. Now let's go over to NASDAQ here, and what was it, yesterday? Yeah, yesterday placed some calls in NASDAQ, and I was waiting for a pullback all day, right? This 5-minute chart. Never got one until the very end of the day. So these calls were placed here, and those are in the TQQQ, which I like to use. July 18, $70 strike price. 670, those are currently 630. Shoot, the close today had a lot to do with that, right? NASDAQ still looks great. I didn't really have any concern for NVIDIA's earnings, because things were really dumping into the close, and we'll talk about that in a second. But usually if things are ripping going into the close for NVIDIA's earnings, I get a lot more hesitant than if things are really selling off. So, the reaction to NVIDIA's earnings is a positive one. And, over 140 looks good. I figured, any great reaction to NVIDIA's earnings, the stock should open above 140. As of now, it's above 140. So we'll see what happens. So, with Donald Trump and that reporter and people talking about the taco man, Trump always chickens out with those tariffs. After that interview, he says, where is it? He says, I'm banning all chips to China. So that was cause for this massive selling. And, I don't know what to say about that. It is what it is. It doesn't really matter, right? I have like I always say, I have a certain system. I stick to the system. What people say is not a part of that system. So, I don't really care. Okay. Now, speaking of what people say, let's go over to Uber. And Uber, the stochastic was down here around 20 on this day. This is Friday. And I went long calls Friday. July 18 expiration, 875 is $87.50 strike price. Those are calls. Paid $5.50 for those. Those are currently flat. Look at this. I placed these. Let's see. Where are we? Is this Friday? Yeah, this is Friday. I placed them like right here. Like right in the morning when things are really selling off. Place them right here around that, 550. That was, great spot. Now with, Tesla coming out saying they're going to have their robo-taxis rocking and rolling in Austin on June 12th. Obviously, that is not good for Uber, and such is life. I was so excited about these. These have been working so good. Oftentimes the ones you're most excited about turn out not to be winners. But look at this on a monthly chart. This is just quite remarkable. And the weekly chart looks good as well. Today kind of sucked, but we'll see what happens tomorrow, and towards the end of the week we'll see what happens with these. So that's it for everything. Nope, that's not it. So we're gonna go over waste management. Waste management is one of those stocks that's always sort of good to have in long-term portfolios. No one ever talks about it. It just kind of grinds higher. And so, I've added it to some longer term accounts, and no one ever really talks about this stuff. Not in sort of any extreme extended territory, right? So, yeah. Oh, and then GTX. We are in this one, although things are looking really bad. But like I said, we'll get through all this crap in here, and and see what happens. This still looks fantastic. If you sort of zoom out on a weekly and monthly chart, this is great. I added to this the other day. So that brings the average cost basis to 1095, and yeah, we're just chilling here. Short term, this looks absolutely terrible short term. Talk about a characteristic change. It's pretty wild. So, hey, there's a gap to fill down here. It very well could at this point. This is quite a remarkable character change here. And so now let's go over indexes. And we already kind of talked about, NASDAQ, SPY, futures looking good as you would expect with NVIDIA. SPY, still looks good. Still looks really good. With tech stocks, hedge funds are super underweight tech stocks. So put that into the bullish camp for tech stocks. Hey, if this can start to move and break out, then look out. Things are going to get nuts. Let's go over to Dow, see how Dow's looking. My favorite Dow. It's lagging. I don't know what to say. Let's go over to Russell. And wow, cool. Russell's looking all right. And now let's go over some of Mag 7. Good reaction to NVIDIA's earnings. I listened to the call. Every time I listen to NVIDIA's call, I always get super fired up. Look at this. It's just, there's lots of craziness going on in here. But, yeah. So, all right, let's look at this on a weekly chart. Ugh, yeah, I don't know. This is quite funky, I gotta be honest. It's really strange looking. Let's look at this on a monthly chart, and I don't know. Talk about a total character change. It looks completely different. So, but whatever. All right, now let's go over to Meta. I think Meta announced that they're going to be opening up physical retail locations, physical retail stores, and it has something to do with their AI glasses. I think that's kind of stupid, but what do I know? All right, Amazon, looks good. Yeah, Google, whatever. Google, Microsoft. And yeah, Microsoft is kind of struggling right around this whole area where you think it would be, but no cause for concern. What are you going to start a position here? What are you risking, right? For the reward. Let's look at Palantir. I've kind of forgotten about this stock. Wow, this looks like a fantastic spot right here for Palantir. Sheesh. So I'll write that one down. Although, Palantir and NVIDIA are rocking, NASDAQ usually is. So, I'm not a huge fan of single stocks. So, yeah. Okay. That's that. Let's look at Netflix. Just grinding higher. Let's look at Take-Two. Let's see. A little bit funky. It looks okay in here, but with these gap downs and heavy selling, I'd be a little bit skeptical here. Let's see how EA's doing. Yeah, I don't know. Okay, let's go over sectors real quick and then call it a day here. So XLF, looks okay to go after here. You have clear risk below 50 is where I would cut it. A close below 50. All in here is just such huge resistance area where it is a little bit sort of worrying, right? I mean, but that's really indicative of indexes as well. That's pretty much where we're at with everything. So Palantir, which, like I said, I'm not a huge fan of single stocks. Like, perfect example, Uber. It looked perfect. It meets my criteria. Everything's rocking and rolling. Those calls were up big time. Um, and because of an announcement that another company does, completely crushes a single stock, right? So you run into things like that a lot. But at the same time, with Uber, I caught this whole move right here, this whole thing. I was in, super similar setup to where we're at now. Very similar, kind of pullback, 20 stochastic, above the 21-day EMA, and I caught this whole thing. And with calls, those were huge gains. This was like a 12% day or something crazy after already being up very nicely. That was a huge gain. Now this big move was because of Tesla's investor day just flopped. Wall Street thought it was terrible, thought the robotaxi was terrible, and so Uber stock skyrocketed as a result, right? And that, I was in that, and that is lucky, right? So sometimes, you can catch these and it's fantastic for single stocks. But there's also a downside to that, and here we're seeing that right here. Super similar sort of setup, except for even better, I would argue, as this was an all-time high and pulling back. Like I said, we'll see what happens. I'm not a huge fan of single stocks. Palantir. So that's a long way of saying, if Palantir and NVDA look good, and you've got like Meta, Amazon, Google, Microsoft, that all look good, then typically I just go, for NASDAQ. Like I say a bajillion times, you don't need single stocks to outperform the indexes, so I just stay away from them for the most part. Now, clearly, I hold single stocks. I have, longer term, accounts and strategies, and sometimes strategies will change or whatever, but so that's my whole stance on that. So XLF. So let's look at JP Morgan now. See, this looks really good. I'll say this is a decent amount of consolidation. Nice bounce off 21-day moving average. Stochastic was down there. Wells Fargo. Let's look at Goldman Sachs. See, Wells Fargo looks all right. Let's look at Goldman Sachs. See, this looks all right. I mean, all these look like a pretty good spot in terms of a risk to reward. Now, if it's going to get rejected off of this area, and roll over, then I would get out of these, right? So that's cool. Like, I'm willing to risk. You always have to be willing to risk something. And so this would fit the criteria. If JP Morgan, Goldman Sachs, Wells Fargo, if they start rolling over, at their current levels, this will close below 50. So that meets my criteria, right? So you got 60 cents, for to make $1.50, right? So that's a 3-to-1-ish risk to reward. And that's just off, looking this real quick, right? I could adjust that a little bit as we go, but, just plain and simple, super clear. If this starts moving up, this will get, around 52. I would probably cut this at 51.80. But if it rolls over, it'll be below 50. So just right off the bat, you're right around a 3-to-1 risk to reward, and that's good. That meets the criteria. Let's look at Berkshire Hathaway. Oh, this looks not good. But 500 level is pretty decent support area, I would say. Yeah, it's not look good, but not terrible, right? It just doesn't look good. Big gap down. Okay. Let's look at real estate. How's that looking? Wow, it's holding on pretty decently. Let's look at bonds. Yeah, I mean, this is really good to see. We need to see these moving out. We need demand for bonds big time. Big time. Oh, let's look at Apple. Wow, huge laggard. Yeah. Super surprising, right? So, for example, like, all through here, and then as this was moving out, this looked great, and then just straight through the 21-day moving average, straight through the 50-day moving average with Apple, like the greatest stock in the whole entire world, to now where it's at 200. I mean, it's pretty wild, So, anyways, all right, let's look at healthcare. Looks terrible. Biotech, terrible. And oh shoot, let's go to utilities and communications. As utilities get into the place where we can go after this again? Yeah, I would say so. Utilities. It's to watch, but XLF I think is to go after tomorrow. And that's it. I mean, let's. Oh, we already looked at Bitcoin. Let's look at Bitcoin miners real quick. Just a couple, down 10%. Yeah, I don't know what to say. Let's see how IBIT looks. Yeah, just again, I really, the chance of this moving higher in the short term, I think is less. However, Bitcoin really sort of tracks, NASDAQ in a sense. And it's actually been outperforming, which is wild. So, who knows, right? Who knows what can happen? So with that, we'll end it and catch you guys later.